In this video, I'm going to break down ICT's latest trade that he took today on the 28th of November 2023. Now, the last 2 days, I have uploaded videos of ICT's previous trades, and my inbox blew up again as soon as he posted this trade. It's kind of funny what I'm doing now. To be honest, I haven't looked at ICT stuff for a while. I stopped really following him once I had my golden bullet strategy and I was more of a Goldbach trader. Because once you understand Goldbach, you don't need to know those extra, ICT, what are they, strategies or tricks. I think once you know the Goldbach levels, you're kind of content and you know how price works, so you stop looking for any extra magic sauce. But I was alerted to this trade, so as requested, I'm going to break it down. So he essentially took a buy here. It was a market order, and then he set his stop loss a few ticks lower. And this is how I see the trade. So this is the markup where he said sell side liquidity was purged. For the sake of good order, I have marked up his trade. So this is his entry. This is his stop. And this is where his take profit was. Now, at first glance, price action kind of looks a mess and you don't really know what's going on. This is why it's important to understand Goldbach principles. Then you know the right time to take trades because you understand when time and price is coming together. And there's these little hacks that you know about that are footprints of the algorithm, real true footprints of the algorithm based off of the power of 3 numbers. Now, let's go through the magic. We will open up our AMD Goldbach indicator. And this time we're using the 27 and the M1 time frame. Now, I don't think I've spoken about algorithm 1 a lot. So algorithm 2 I talk about a lot. So algorithm 2, as you should know by now, is we start from the rejection block. We go to the breaker. We return to the fair value gap. And then it should TP at the opposite order block. So that's algo 2 as per the book, which if you don't have a copy of yet, I don't know why you continue to watch my channel, my videos. It would be so much easier if you just read the book and then watch my videos. Then algo 1 is we start from the low. This is my interpretation of algo 1. This is how I teach it. We then mitigate the order block. And the algorithm TPs at the opposite rejection block. Okay, these are the 2 algorithms, the main entry-level algorithms that you have to know when you are learning Goldbach. And there's so many more. There's some fantastic, crazy Goldbach algorithms. Well, once you start seeing them, you can't unsee them. It's unbelievable how things mirror and what things do between dealing ranges. But for the purpose of this video, ICT used an algo 1. So algo 1, you start from the low. So we started here at the low. This is where he came in. This is your order block. You see? So ICT always says you can either choose to be a fair value gap trader or an order block trader. It's up to you. But in this case, he was doing an order block trade. There you go, there's your order block. So you have the order block. Now an order block is not enough. You want something which is known as a power of 3 stop run. So you want liquidity to be purged, but that liquidity run, you want price to travel a power of 3 number of ticks. Now, ICT drew this line saying sell side liquidity purged. I think he actually meant this line. Or maybe he knew which line he meant, but he wanted to mark something different. Why is this swing low important? Because if we measure it out, you had a 3-tick stop run, exactly 3 ticks. And for those who are in Hoppy's group and read the book, this is called a power of 3 stop run. Right? So we created liquidity, we moved away, we stop ran it by exactly 3 ticks. 3 is a power of 3 number. At that point, this order block, which swept this liquidity, is now valid. And as long as you're bullish, you expect this order block to hold. So as soon as price went above the order block, this order block is now valid. Now, what ICT used to say back in the day was a bullish order block is the last down close candle before the impulse, before the move higher. And then later he started saying, no. An order block is the last consecutive down close candles before the impulse. In fact, it's really the last down consecutive candles that fall within the order block GB level. Right? So this is our order block, these two. As soon as price poked his head above, this order block was now valid. And if we are bullish, this PD array should hold. And we have this power of 3 stop run also validating it. And then all he waited was a return into the order block. At that point, he executed a market order. And where did he TP? He TP'd just below equilibrium. So to be safe, I assume he wanted to TP at equilibrium, but maybe our good friend ICT doesn't want to show us this exact price, because this is the exact price of equilibrium. So in order to keep his magic hidden, he TP'd just before, so you have a different reference price. And also with his stop loss, I think this is the right stop loss he used. Or it may have been here. No matter what it was, the logical place to put the stop is here, but obviously he doesn't want to highlight this price. So we had a couple of ticks higher, just so he doesn't reference the Goldbach levels. A nice short video for you guys today. In a previous video, I've probably mentioned Algo 1, where we start from the low, we mitigate the order block, and then we terminate at the opposite rejection block. In this case, ICT decided to TP at EQ, or just below it. So once again, Goldbach wasn't invented by me, right? I can't take credit for Goldbach. Goldbach was actually discovered by Hoppy. Give this guy a follow. It's crazy that he only has 6,000 followers, considering he is the guy who is telling us exactly how price moves according to the PD arrays defined by mathematics. So give Hoppy a follow. Go check out his work. Once again, if you would like to really understand Goldbach, there's a link to the book in the description. And if you would like to have a mentorship call with me, there's also a link to my mentorship program in the description below. Any questions, feel free to leave a comment below. It's always good hearing from you guys. Otherwise, happy trading, and I'll catch you later.